All right, guys, we're live. And we've got to do it one more time because I just realized that the video that I uploaded last time, it wasn't in the right quality. It was super low quality, and that's on me. So I'm redoing this whole thing again. So let's start out with where we were last week. So this was the markup we had. If you go back to Carbon Capital's YouTube page, which is where you're here, go back to the page, click on the last live, and you're going to see these chart markups. And I'm going to go over how they turned out. So you're going to notice that we had a break up here. Perfect wick fill zone on the dot. We broke trend. We hit TP1, hit TP2, never got to TP3, but this wick fill zone on the bottom is where I really wanted to look for a rejection to come back up and test these areas before we fell any further. So ultimate TP here, TP3's here. We protected entries right up here and closed them along the way. Turned out to be a solid trade. If I go back to my trade history, you can see we had a few sells over here where I tried to catch, held on to. We had profit down here on the bottom. So we were able to play a lot into these levels and have fun with them. Let's go here, tell my trade history, go back to levels. So looking for that ultimate TP in here. Now, Andy, what about US 30 going into this week? Where are we at? Well, I like this weekly area. If we zoom out on the weekly area, we got a dot to dot. Then we got this big wick fill. So we rejected up here, gave us the perfect dot, and that gave us the wick fill, and that's where we've been playing into, and we rejected the weekly trend line. We're below the gray zone, which is the wick fill, but we need a weekly candle to close and continue to play into this zone down here. This is the weekly levels. 32,869 and 31,822 is the weekly levels that we're going to play in. Now let's look at it from a 4-hour perspective over here. And we've got a dot to dot right there. And then zoom out a tad bit more, you got another dot way down here coming to this area, which gives us this little wedge on the 4-hour. And I mean, on the daily, looks great. 4-hour looks good. And what do we have? That 4-hour candle's peeking out around that area. Now, if we go into the 15-minute, you're going to notice that we got this gap that needs to be filled. So the market's going to be open in 8 more minutes. We need this to push back up, fill this gap, and then we need it to close that 4-hour candle below the dot to dot, which would give us a continuation of last week's play. That continuation would take us on the 30-minute down to these levels that I have marked out here, which is a wick fill zone, a wick fill zone. This would become TP1 for this break. We almost have a 3 dot to dot. We're going to run 2. I mean, even if we put another one on this dot, I mean, it runs pretty dang close, not worried about it. But this gives us that break to come all the way down TP1, TP2. You know the drill. Close partials, protect the entry, okay? So that's where we're at with there. I'm going to go ahead and do this. That way I don't mess up the chart. So this is what we're looking at on the 30. Remember, higher time frames, we need it to break. If you're getting into buys, I mean, on the 4-hour for the long-term buys, you're not getting into a buy until we break that upper trend. Even in this area, you're not getting into buys unless we get a massive rejection down here, and then we get something we can put a trend line on through here to break trend to head up. So for me, even if it buys, I'm not getting into buys because I want the sells. My markup is telling me sells. That's where I'm going to look at for the remainder of this week. If I'm wrong, I'm wrong. But here's the cool thing. If I'm wrong, I'm not in any positions in buys. My sell's already protected. I'm good to go. If it breaks here, we'll take sells. We'll run it down TP1, TP2, protect the entries, easy. Gold did exactly what we wanted to do. We had a wick fill. Remember, we said we're not looking for sells unless we break 1950. We never broke 1950. Wick fill zone, broke trend, shot up. That was our high risk area. We still need a 30-minute candle closure above this break zone to run it up. GU did great. Wick fill zone, we had the break on GU right here, break, ran all the way up to TP3. Solid trade, super easy on this one. Odd U, I deleted the chart on here, but odd U, all we were looking at was a dot to dot that looked like this. I fanned it out just a little bit, so you had a wick fill, got in the trade. It did hit TP1. We had TP1 right here at this zone. And then we had TP2 up here. We had another swing high in this area right here for TP1. That's where we closed out, and it gave us a swing high there. So solid trade. EU still hasn't broken the trend. We need a true, so that should be on the 1 hour. We need a 1 hour candle closure above this. You could probably look for 30 minutes, but I'm going to say 1 hour closure on EU. CAD Chef, we broke, came down, hit TP1. We're protected at this entry. Now we just need to close this gap, and then a continuation of TP2 and TP3. GJ, I'm just shorting GJ because when you look at this thing on the weekly, we're right here in this last weekly zone. You zoom out, the last time we were here is over here in 2016. So it's like being that high up since 2016, I'm okay with taking the risk on these shorts. So in NAS, I'm still bearish on NAS. There is a gap here that needs to play out. We could retest this trend line again, but I really want to break down. I've got my TP here for this little short sell that I've got. And then if we can break on this TP3 area, I would run it back down to this gray area. So again, I know a lot of importance on US 30 this week. We really need to fill that gap and then just push through these zones. If you're playing market open, that's what your market open is going to look like today, is that TP1 area, TP2, if you're not in these cells at the top. And that's all I got. Now, again, you guys have seen me trading this account. This is the $20,000 account that we've been trading. So the lot sizes aren't as big as we want to take them. We've got this account now setting at 138 with equity at 140. We got some open trades here, not bad. If we look at the history, here's the history. We look at last week's trades, which was right here in this 517, 519. You see, we wasn't taking too big of risk. A 0.1, which is $10 a pip, a 0.25. The biggest trade we had on US 30 was $50 per pip. That was the sell that we took, which was it was a great trade. Can't complain with that one. And then we got knocked out at break even right here on this NOS trade, which I wish I would have kept that one open because it was just an all-around solid trade. So again, remember, market's about to open in 4 minutes. Screenshot this, save these charts, do whatever you need to do, and let's just have fun in the market this week because we got solid markups. It's looking to be good. We have some news. That's it. So check back. I'll be on Carbon's YouTube channel twice this week. I'll be doing an update stream on where these trades go, how they turn out. If I take them, obviously I'll give a reasoning why I took them based on what we see here, kind of do a little bit of education. And then we'll have one after that going into how the rest of the week's going to play out. So I hope everyone has a great day and